The macro environment theoretically should be very, very supportive of gold. And again, gold has done very well relative to other assets. However, we're having a tough time breaching $2,000 now. So you think that with inflation at current levels and equity markets and risk assets falling as they have been, this is the perfect environment. What's holding gold back, you think, from reaching its previous high that we've seen in 2020?
I think the main things are going back to the three big macro issues or talking points of the day, which is inflation and the Fed's ability to fight it. It's the war in Ukraine and it's China.
Yes.
And you could argue that we went from a kind of a positive scenario in all of those three to now maybe a negative scenario for gold, particularly on the inflation front. One of the biggest things that's holding gold back at the moment is the increase in real interest rates or real yields. The war in Ukraine was certainly a positive for gold, but has probably slipped in significance a little bit as the conflict seems to be more contained to the Donbass area or Donbass region. And then China, went from positive to negative with the COVID lockdowns, the COVID situation, which I do think is temporary, but clearly the zero COVID policies are having an impact on gold by just restricting consumption. So I think that's the situation that we're at the moment.
Yes.
And certainly, I think if we have seen peak inflation here in the market, and we have seen maybe evidence of the Fed perhaps walking back some of these hikes, gold can do well. But I think we need China to come back online, and in the immediate term, some softening on the inflation fighting rhetoric from the Fed.
Okay. So your outlook on gold then for the remainder of the year, do you think forces such as the US dollar, real interest rates, do you think those variables will be supportive of the precious metal going forward for the remainder of the year, or not so much?
I don't think they're particularly supportive, David, in of themselves. What is going to make it supportive is the fear returns. In other words, I think the people have really just been taken aback. I think people are in shock right now in terms of what's happened since the beginning of the year. I think that people thought that equities were still very much in a buy the dip type situation, and people have been trying to buy the dip up until really the last week or so, where we've seen just down days, where we've seen almost entirely selling in the market, and that's been very unusual compared to what's been happening the last few years, where we've seen proportionate buying and selling on the days. So I think that this particular environment has taken a lot of people by surprise. People that are in a 60-40 portfolio, for example, 60% equities, 40% bonds, have lost money so far. That is again a point where at what point do those people change that allocation in a meaningful way and try and defend or preserve capital in a way that they haven't before? And I think the crypto market, again, carnage in the crypto market, and people are looking potentially to get out of crypto altogether. And where does that capital go? And I think gold, clearly, it all comes back to still one of the best or highest quality assets in the world, that is not correlated to any of these particular asset classes, be it stocks, bonds, or crypto. And so I think if we're not already there already, we're going to get there, where people are realizing that they have to have some exposure to gold, they have to have exposure to commodities, and the weight of money that will flow out of bonds, out of equities, out of crypto. And I think gold will catch a fair amount of that market share, and that will benefit prices. We saw in the ETF market, gold ETF holdings, we're not there in terms of the all-time high, but we're certainly on a pathway back to the all-time high. We're not as high as we were when gold hit an all-time high in 2020, but we're certainly on the path there. And I think if we get there, again, it's going to be out of fear, and people moving out of these traditional asset classes and getting some gold.
Right. Well, hopefully the food shortage situation won't get as bad to the point where we can't afford to buy gold because we can't even afford to buy food. But that's a very bleak scenario. Yeah, let's not pray for that day to happen. I mean, it might be very supportive for gold, but we won't be able to afford it. So finally, let's close on the PGMs, platinum and palladium. They've had a few spikes here and there throughout the year, but the long-term trend over the last 1 year has been down.